Hello there, my friends. Chris Marcus here with you for Arcadia Economics. And today, an exciting video, especially when you hear what's been going on with the metal that has at least been reportedly added into the silver trust, such as SLV. Lots of other stories. It's Memorial Day weekend, so I was going to record a quick one for you guys today because there's some fascinating things happening, which we will get to. As you can see, I'm outside today. Beautiful day here in Denver. Gonna lie down, take a nap in that backyard a little bit after we're done here. But let's dig into the action first, because certainly if you get Ed Steer's fantastic newsletter or are a subscriber to Gold Charts or Us, maybe you've seen this elsewhere already, but just stunning amounts of silver being added to these trusts, the silver trust again being SLV. There are a bunch of other ones. I think the Sprott Trust is counted in here. Amazingly, Deutsche Bank has a silver trust, which I mean, I wouldn't store my metal there. We'll just leave it at that. And but not only, so you see here 23.857 million ounces, which is a lot. Although I know these numbers, there's so many numbers in the financial world today. Let's see if we can put it in context. You can see on this chart here, it goes back to mid-2017. Aside from about 2 months ago, that week where you had that big one there, this is the biggest amount. And to put it in further context, let us take a look at this one here. Here you see this column down here showing that 52 million ounces have been added over the past 4 weeks. Again, you see some of the different trusts here. Here's iShares, SLV. So 43-ish of the 50 went into SLV. It's the biggest one. But fortunately, we have this button here where we can click, look at the 10-year, and then you come down here, you see that line there, and really these two in the past few months. Really going back, you had one spike in 2013 there that may have been slightly bigger, and then you have one in 2011. So I mean, this is at least the fourth largest. I'm going to say it beats that one in 2011, close to that. So it's either the second or third largest amount of metal that has been added into these trusts in the last 10 years. Why don't we take a look at 20 years? And again, you can see there's one in 2006-ish. And I would imagine that's accounting for when SLV was started. So you see what happened last week is, I mean, whether it's the third or fourth or second most largest amount of silver that's been added into these trusts ever. Perhaps you can excuse my eyeballing here, and the point still being the same, that that's a lot. And although we can put that in further context, because before we get to gold, I'm going to play this. This is from, I know a lot of you out there have been listening to the Big Silver Short. The audiobook is out. And by the way, if you ordered the audiobook and have not received the link yet, I've gotten a few emails like that. Check your spam folder, because it did get sent out. And if not, email me at chris@arcadiaeconomics.com. Do want to make sure you have it. It should be there already. And in the Ted Butler chapter, as you may well be aware, Ted talked about how he felt the driver for the price run up to $50 in 2011 was due to the metal that was going into SLV, which he said was 60 million ounces. And so if 23 million ounces went in the last week, 50 million over the last 4 weeks. And then, of course, you can see back in this chart, let's go back to, let's take a look at the 1 year. So here we have, let's call that a billion, let's call that 1010 on that scale. And now we're up at 1250. So that means in the last year, about 240 million ounces have been added to these trusts. Again, I always say reportedly. I wonder if it really goes in or not, and I have a feeling we'll soon find out, but check out what Ted had to say about it.
Of SLV, the way the trust works.
Whoops, I had it on my double speed setting. Listen to podcasts on double speed so I can know more about silver faster. That is the dedication or addiction, whatever you want to label it, but here we go.
Shares of SLV, the way the trust works is that all new buying has to be satisfied with physical metal deposited to match the new shares created. And something like 60 million ounces was bought collectively in SLV in a few months period of time prior to the price peak. And I contend that it was that buying of 60 million ounces and the deposit, the physical deposit of the 60 million ounces that contributed greatly to the physical silver shortage. At the same time, Sprott was coming out with its physical silver ETF, adding more pressure and demand for physical silver. So the physical shortage that started to develop in 2010 was created by investment demand, okay? Right. I would say that 90% of the people that were buying the
and so we'll leave that. You can hear the whole clip there. This is on my channel, Ted Butler on silver shortage. So again, the point being that if, and again, I'll defer to Ted because certainly he is a world-class expert on this topic, but you feel 60 million ounces was enough to drive the price to $50. And now 240 million ounces have gone in the last year alone, 23 million ounces in the last week. Well, it doesn't seem, at least according to that scale, would add up, and we will come back to that. First, a quick look at gold. Where is the gold chart? Where has it gone? Here we go. Gold, you can see, still not as big as that peak about a month and almost 2 months ago, but another 2.6 million ounces added into gold. And you can see here millions of ounces. Let's call that 92 and a half, and is up to 137. I mean, these are, it's not an accident that whether it's on my channel or others where you're seeing videos of LBMA liquidity warnings, COMEX is getting gold to meet delivery from the Perth Mint in Australia. I mean, look at these, look at that spike up there. So I mean, really, it's almost, I wouldn't say surprising, just because we know how much pressure the banks can still put with the paper contracts, but I mean, it's still almost surprising that you haven't seen the prices go even further. You know, with silver, I mean, that you have that much metal being added in and the price is still below $20 seems highly illogical. Let's see if this will take us to the gold one. Okay, there we go. So here, let's take a look at the 10-year to get an idea. So you see there was actually a big dip following, I guess this was when the Fed was pretending to tighten, but you see it stayed flat, but really, again, let's call this mid-2019. So the last year, quite stunning. And one of the many reasons why, while I am not going to say anything is definitely happening, it's certainly looking more and more likely that we see some sort of resolution to this leverage this year. My best guess is that when it happens, there will be somewhat of a binary bang at some point. I don't know that I see this going in a slow grind. You know, the thing with, if you get physical metal or mining shares of companies that have a good balance sheet, the best part is then you don't really have to care. But since we're human, and also since I'm an option trader, I'll just share that I am fishing for some option positions on miners that expire in January of 2021. So about 7 months from now. Or I may just buy, I was thinking today, and we'll run this by the quant team. You may have seen that option call the other night. If not, check it out. I think you'd find it interesting. Was about 5 days ago, we debuted our option model. And I think actually it might work better to buy short-term options and just roll them over rather than a long-term. We'll be digging into the math with that with Renra, our quant, later this week. I'll let you know what I find. Another thing that is interesting in the silver world, you can tell when things are really starting to move when some of the mainstream outlets remember how to spell silver, which also you see here on Forbes. An interesting article on silver. We're going to dig into this one a little bit because the forecast for silver has been a tumultuous year. Experts are bullish about metals, and they're going to take a closer look at silver. How has it fared? Virtually every asset price fell in March with the sell what you can mentality many investors held during this frantic period. Well, as we'll touch on briefly later, similar to WoW, when gold fell from 1,000 to 700, silver went from 21 to 9 in 2008, and everyone said that was just investor selling or panic selling. I would personally dispute that because, as you heard from Bart Chilton, or if you've listened to the final chapter of the Big Silver Short, you see the banks were increasing their positions. You had physical shortages of metals. And I would certainly assert that that dip had a lot, as well as this dip in March, had a lot more to do with paper trading on the COMEX rather than, again, you saw in the silver charts for the ETFs that even while supposedly people were selling, we heard these stories of, well, investors were liquidating ETFs and SLV. Well, that's not what the numbers show. Here's a great little paragraph. Is silver susceptible to price suppression? It's worth noting that neither the U.S. federal government nor the Fed system can assert significant control over the price of silver. They don't say anything about any of the commercial banks there, who I would say, and do I think Bank of Nova Scotia or JP Morgan personally cares what the price of silver is? I mean, to some degree, yes, because if they have a position now, they do. But I mean, people have said, well, can't the price be manipulated upward too? And of course it can. My best guess is the banks are going to manipulate it whatever way they can make the most money. Although when I wonder why is it that, I mean, if I can figure it out, you'd think someone in one of these regulatory agencies could piece this together, or at least read the book where we laid it all out for them. But it always just made sense to me that the government maybe didn't map this thing out, but certainly wasn't going to go out of the way to stop it, given that the printing press allows them to continue doing all the things they do. Also worth noting, Federal Reserve, who is that? That's made up of the banks. And given the way we've seen bankers go in and out of the White House, I mean, now we have the Goldman Sachs cabinet. So federal government, Federal Reserve, U.S. banks, are they really different? I mean, are the same guys calling the shots there? So although the conclusion, therefore, the price of silver is ultimately beholden to global market forces rather than domestic price manipulation. Obviously, I'm going to disagree with that. Although why I'm pointing it out, I'm not trying to be a complete smartass here, but just this is, and not to say that my version is right and other people are wrong. Just, I mean, you're watching the channel, you probably have heard how I feel about this before, and but I think that you're going to get, especially in the mainstream, a lot of perspectives like this that, at least in my opinion, are not capturing what's really going on. So here we see silver's industrial usage is prominent in solar panels. Again, I'm here in Denver. It looks like our government just gave a tax rebate to if you buy solar panels. Key factors that could influence the price of silver. Silver tends to perform poorly when the US dollar is strong, which would make sense. Although the US dollar is currently strong, the Fed has recently cut interest rates to zero, which could weaken the dollar. You know, just chance. I mean, uh, you know, the printing trillions almost by the day now, so it's outside factor. Um, Regarding supply, a January 2020 report by Scotiabank, who is reportedly exiting the business, they determined the global supply of silver is fundamentally oversupplied. I took a brief look. There is a link to their report there. I wasn't completely blown away by it. Um, I mean, there's a degree to which I don't think anybody even really knows. I mean, in the book, Keith Neumeyer talked about how fraudulent the data that's out there is. Um, I wouldn't really trust a bank report on the matter. And I would just point out again that there is plenty of, if you talk to a lot of these mining companies, I've seen reports as much as 50% of the supply has gone offline due to Corona, or I guess now we're supposed to call it COVID. I still don't get that. I have so many Corona and COVID questions and thoughts. I'm trying to figure the right way to express those, and we'll get to that one of these days, but certainly a lot of unusual things happening on that one. Again, a little more mainstream coverage of silver. Here it is. Soaring silver attracts investors on the Wall Street Journal. I don't know that I'd call silver soaring. I mean, I don't know. It's up a little bit in the last month or two. Just interesting. And again, you can see the way things are phrased that if you're not looking closely, you can get one perception, which may or may not match what's really going on. So by all means, I try to put things in clear perspective whenever possible. Yes, I have my opinions, although I hope this comes across, because my goal is never to get you to believe anything. I'm just really sharing what I've been stunned by for the last 11 years, and hopefully that puts it in perspective, allows you to make the best decisions for yourself as possible. That really is my only goal. Venezuela files claim to force Bank of England to hand over gold. We talked about that between Dave Kranzler and I in one of the episodes recently. I would love to know what is really going on with Venezuela's gold. Maybe I'm the conspiracy theorist. I imagine there's a lot more than maybe these headlines that are put out by Reuters. To be completely honest, I would love to go to Venezuela, particularly with a camera, and just meet people and find out what it's like and how people are handling these different situations that are going on, and what happens when the currency breaks down. Because, you know, certainly there's going to be challenges when the dollar is collapsing here, but to the degree that some of the issues have been faced before, and we can learn from that. So I don't even know if our government is letting us fly to Venezuela these days, but if anyone knows more about that, send me an email at chris@arcadiaeconomics.com. Maybe we'll take a class trip to Venezuela. Would love to go to Cuba. Maybe we could stop by Antarctica as well, which sure seems like a fascinating place. Anyway, back to the silver world. Here is another fantastic article by Craig Hemke. Crisis Confidence Part 2. Starts off Crisis of Confidence. I want you to see the headlines of these in case you want to look any of them up further. He talks about the spread between in the gold market. And to him, this recurring spread between spot and the June 20 contract is a sign of ongoing tightness, and more importantly, a loss of confidence in the fractional reserve pricing system. Why? Because the only reason someone wouldn't immediately execute the arbitrage trade described above is out of fear that you won't have the 100 ounces in hand when it comes time to deliver. Certainly agree with everything he's saying here. I'm going to send him a message and see if we can get him back on the show soon. And he says, as my friend Andrew McGuire likes to say, quick note on Andrew McGuire. Today it's Monday afternoon, scheduled to talk with the great Andrew tomorrow morning. So that should be fun. But what Craig's mentioning, so the problem's solved not so fast, because here's the screenshot of the spread in silver. And as Andrew McGuire would say, wait a second, hold on just a minute. So the spread in COMEX gold has returned to normal because allegedly because supply strains have eased and confidence in delivery has returned. But how does that explain the ongoing and widening spread in COMEX silver? By the logic of, all right, we'll leave that. Why else would someone not simply arbitrage the gap? And goes through a few more things here and get some good data. That's one of the things I love about TF metals. I'm not the most quantitative or lawyerly guy at reading through these CME reports. Fortunately, there are guys like Craig that do a great job, and if you are not a member of his site for just $12 a month, a lot of great stuff in there. But let's get to the takeaway. As an investor, the fact that the spread persists, betrays the cover story paid by the paid shills for the system. The spread premium persists because there is not sufficient metal to satisfy immediate delivery demands. And we will hear more about that in a second. Growing physical demand will stress the banks and their system to a greater degree, and the eventual collapse of this scheme will lead to a new pricing structure that is related to supply and demand of physical metal, not of digital derivatives. When this day comes, and these current spreads may signal that it's coming sooner than later, the price discovery for physical gold and silver will likely not be at the current levels. Really a great article. I'm going to really dig in and study that one a bit later. And partly also, this was a couple days after he wrote this. Craig did last Friday's interview with Eric Sprott, who talked about signs of this, not signs of the silver shortage, but actual silver shortage, including mentioning that one of the largest dealers was asking him if he had any 1,000-ounce bars. I put up a short video with a link to that on Friday afternoon to hear the full interview. So it's all there. Got you covered. A few more before we wrap up. Here is a story from the armchairtrader.com. Gold and silver ETFs attracting investment ahead. What does it say behind my face there? Ahead of deflation. Wow, that's weird. Ahead of deflation. Perhaps we'll dig into this whole inflation versus deflation and what is really happening in a future episode. But just the point here, I think you're going to see a lot of things like this. Actually going to be releasing an excerpt from Dave Kranzler's interview where he did a nice little rant on GLD and SLV a few weeks ago. By all means, invest in whatever best serves your purposes, but just for folks who may be new to this, a lot of concern. I would not use them outside of if I wanted to make a 1 or 2 week short-term bet on something. So, make your own decisions. Just if you hit that subscribe button and the notification bell right down there, then you'll know. Hopefully I'll get that one out this week, but I see some risk. I'm not trying to bash their product, just sharing how I look at it. Geez, I guess today's video is going to be a little longer. Hopefully it's entertaining because there's still a few more stories in here. But I mean, some of this stuff, here we have traders beware, U.S. taps new tools to find fraud in volatile markets when the Department of Justice charged a handful of JP Morgan traders, 18 and 19. It wasn't the first time the government had probed the activities. Talks about the earlier investigations by the Department of Justice, or the CFTC rather. And there was one gem in here. The Justice Department's commodities crackdown has recently targeted spoofing. And I wonder if they would call this a spoof, what happened on May 1st, 2011, when silver dropped $6 in the midst of QE, and that was the same year the US was getting downgraded. As seasoned prosecutors of healthcare fraud, the team believed they could apply the tools they had used and build those cases to the futures market. There was somewhere in here they talk about we could identify a pattern that could lead down the road. James McDonald declined to comment. I've heard some of his podcasts, and I don't. I think that was when he said he was counting on the banks to turn themselves in. And there was somewhere in here where they mentioned, however, a JP Morgan spokesman declined to comment. Somewhere in here they mention how they wondering if now with the new technology they have, they would be able to get convictions on these things. And it's just interesting because, again, that Bart Chilton interview, which was also part of the book, one of the key takeaways, I mean, I've heard a lot of people comment on it. One of the things I don't know if they missed, but is worth mentioning again, is that Bart talked about how basically they did their investigation. They went to a forensic accountant and they said, you don't have enough for a case. He went to another accountant, economist or accountant, I forget what he called it, but they said the same thing, didn't have a case, but he was so bothered by what he saw that he had the statute for what constitutes manipulation changed. And in Bart's words, not mine, he said that were the same cases tried under the new standard, he believed that there would be a manipulation conviction. So basically, in Bart Chilton's words, whether there was a felony or not was really dependent upon the CFTC's definition of manipulation, which is a lot different than saying that it's a clean market. And again, Andely Place commercial for the big silver short. If you go to arcadiaeconomics.com and click on this tab, again, I'm a little biased, but I mean, that was the whole point, to dig into all of these things. And maybe we'll send some copies to the CFTC, hopefully hitting the printers this week. I know I said that last week, but I finished the back. And so it is quite close. And I think this is almost the last one here. Well, we'll second to last one. The last one's really quick, but I was cleaning off my computer desktop and I came across some slides. Here's Koos Janssen, Jan, who now writes for Voima. But he had an article a couple of years ago about how the U.S. government lost 7 Fort Knox gold audit reports. I mean, it's beyond wild and worth checking out if you have time to take a look through. Again, there is the title if you'd like to look that up. The reason I happen to bring that up today is like while I was clearing out space on my computer, I don't remember which video I got this in, but it matched what Jan had there in his article. And I had a couple of screenshots taken that were just so special I wanted to share. This is regarding the Fort Knox, what they generously call an audit. We find that 26 out of over 891,000 gold bars were verified as authentic. So that certainly sounds thorough. But really the real gems are coming. In 1977, 1 bar in every 50th was melted and assayed. 2 of the melts were reported with irregularities. The details of the irregularities are unknown, the assayer is unknown, and there is no assay report included in the audit report. All right. Here we go. For all other publicly available audit reports, it's very briefly mentioned assay tests were conducted, presumably for 1 in every 50th melt. The assayer is unknown. No assay reports have been included. So unsubstantiated rumor that after the same guys who finished the Warren report and the 9/11 Commission were doing the Fort Knox audit. Here you see, again, no audit reports, no assay reports for these audits, and we don't even know who the assayer was. So, which just, now, does this prove anything? No, but I mean, again, all right, if I were president right now, probably this would be one of the first areas I would dig into. And if I really wanted people to feel comfortable, in fact, we don't even have to go to hypotheticals. Now that I do stuff for Miles Franklin and talk about the gold and silver markets, when people ask me about where storage options, I get that if you don't have it, you don't own it. Although if you have $10 million of silver in your basement, maybe you want to store some somewhere. So any of the options, or I've been, again, we're going to have Andrew McGuire on talking about kinesis tomorrow. And one of the things that I was looking into there, I like Andrew, I trust Andrew, but if I'm going to even consider recommending a product to other people, what, and from what I've seen so far, and he'll hopefully tell us more about it, but the proper protocols are in place. And these are things that if you're running a legitimate business, you do, so that people feel comfortable. Of course, it's not a surprise. I mean, we know the U.S. government is not a legitimate business. And here you find the U.S. Treasury has, again, sorry if my head's covering that, has lost 7 out of the 12 audit reports ever conducted on the U.S. gold reserves hold at Fort Knox. They just lost them. It's like a receipt from the grocery store. Why would, and which, on top of it, if they lost those, I wonder if they have records on how much they spent on the audit, because then still more wasted money that will go on the U.S. taxpayer tab. Although, to end up with some positive news, we are now producing Got Silver yoga pants, hoodies, and t-shirts. Mark Carruthers, my friend from First Majestic, if you're watching, I don't know if I'm going to get you the yoga pants, but I got your email. We're going to get some shirts up your way. And especially this is really the final one for today. If you can see here, the M3 monetary supply just going vertical, like any money measure supply, for the obvious reasons. So it is what it is. There's a reason that people are buying gold and silver. I think we have not even started the party yet in silver. Although, if you're curious about any more of that and want to know what's happening really on the physical level, not the COMEX Mickey Mouse nonsense, well, coming your way right now is this week's physical silver and gold market update with Andy Schechtman. So again, appreciate you joining me on this holiday weekend. I hope you're out there stacking up big piles of silver, and just really appreciate everybody watching, all your support lately. And with that said, I will see you soon.